Hey everyone, welcome back to the channel. Today we're bringing you the latest updates on the YieldMax Coin Option Income Strategy ETF, ticker CONY, as of August 14th, 2025, which is today. And you're not going to believe what the true core holding of CONY really is. Stick around because this one will surprise you. Before we get into it, let me introduce myself. My name is Wes, and for the last 2 years, I've been researching ways to make passive income in both the stock market and in cryptocurrency, and want to bring my results, whether good or bad, to you through this channel. If that sounds good to you, make sure you subscribe to this channel, drop a like on this video. I'd really appreciate it. All right, I see that 137.09% distribution rate. Let's see what CONY is. CONY is an actively managed ETF focusing exclusively on Coinbase Global, COIN shares, using an aggressive covered call option strategy to generate a high monthly income. The fund aims for significant option premium yields with capped upside participation and substantial downside risk tied to coin's stock price. One note is that coin is going to go up when Bitcoin goes up. When the crypto market is doing well, Coinbase stock is going to go up. Okay, here's a surprise to me. These are the core holdings of CONY. Currently, they're almost 85%, if I do the math here quickly, in treasury bills, which are earning probably around 4% total on average if you want to average all of them out. But that is the majority of the holdings. There are some covered calls, an October one here, a September one here, some that are, I guess, weekly. These will be weeklies that are going to expire tomorrow, actually. Okay, this is my issue with this. Comment if you disagree with me. Okay, we are in a bull market, especially with crypto. Coinbase is tied to crypto 100%. So if Ethereum goes up, Bitcoin goes up, Coinbase stock is going to do well. Buy the stock. Hold the stock. Hold something that's not just a treasury bill. And, sell covered calls against the actual asset. Where's the asset here? There's not enough even to go to 1%. So you need to hold to be stable, and want people to invest in your ETF, you need to actually hold the assets. All right, to be fair, I did this chart to show coin versus CONY. We're looking at CONY is the actual red and green candles, and then the pink line is Coinbase stock. So they do mirror each other. I went ahead and I put in white here so you can see it better. It does mirror it pretty well, the price action for both assets. I went a step further and I wanted to see what was the better investment if you held both assets over the last 12 months. If you held coin stock, the stock itself, for the last 12 months, you would have had a price return of approximately 52%, which is crazy since coin's stock appreciated significantly over that period. If you held the CONY ETF with distributions compounded, your total return would be even higher. Over the past 12 months, CONY returned 25.46% over the last 12 months. And if you were to compound, this trailing 12-month dividend yield was approximately 118.83%, with a total dividend payout of $11.36 per share. For those investors that would have reinvested those dividends, the compounded total return would have substantially outperformed coin. Okay, let's get the rest of the facts. The last distribution paid was 79.5 cents per share on July 25th, 2025. The next estimated distribution is around 80 cents per share. That's expected to be paid out around August 21st, 2025. They're aiming to deliver a high monthly yield around 110% annually. Okay, let's look at the positives and the negatives with this. NAV erosion, I think, is starting to take place. If we look in the last, on the 4-hour chart, coming up to this high of 1069, it's coming down. Almost in half, but getting there. If it comes down a little bit more, it's going to be 50% of what it was. But at the same time, your yield is so high that it can make up for it. You're at 137.09% APR. So it takes well less than 12 months to get your money back. It takes what, 9 months to get your money back, your original investment, and then everything else is house money. I guess the issue I have with this one is the core holdings, and they're earning pretty good, 4 or 5% APR on their treasury notes or treasury bills. But where are they getting all the yield from? How are they getting all the yield from these tiny little, covered calls? So if you know and I'm wrong, just please leave that in the comments. I want to know for sure, what's going on with this ETF. I want to look at all of these ETFs and see which ones are worth investing into. This one I'm not sold on, even though, if you roll the dice and you go 9 months, you get your money back and then you're playing with house money. If that's your strategy, then that's your strategy. I'm not at the point right now to do that. I would rather just put into ULTY. As always, thank you for watching and have a great day.